my channel, stocks and books by Bree. Well, we talk about buying stocks and dividends, dividing and supplemental learning. Want the secret? Gotta read. Here we go over the fundamentals you need to succeed. Major keys, you might get some gems, economic gems. So be sure to go hit subscribe so you can stay linked in.
Hey, what's up, family? My name is Brown Mills, and I'd like to welcome you guys back to the channel where we love talking about finances and personal development. Listen, family, today I want to talk about some options, all right? I know I've been going for a minute, but I'm back. And I really want to talk about two plays that I'm looking at this week when it comes to Apple and Microsoft. As we all know, if you've been paying attention to Microsoft and Apple, they have been on a tremendous run. And we're going to take a look and see if it's time for a pullback. All right. Now, what I like to do is I like to pull up a chart, bare bones. All right. And I like to have the candlesticks on the chart. Now, when it comes to viewing these charts for YouTube, I prefer to use Yahoo Finance because Yahoo Finance is very simple, very easy to use, and visually attractive to the eyes. Okay, so it's very easy to see and absorb the information. Now, I do have Thinkorswim on, my laptop, but I like Yahoo Finance also, and when I'm at work, I pull up the Yahoo Finance app, I go to the charts, and I can pull up the same exact chart in less than 30 seconds, okay? Yahoo Finance is a phenomenal app to use, and it's great for charting your positions, all right? So now, let's take a look at Apple, all right? Now, Apple has been on quite a bit of a run since April when it was at a low of 120. And it hit a high of 148. But the last couple of months, Apple has been pretty much consolidating, right? So Apple has been consolidating. And so just by looking at the chart here, we can see that there has been some support and some resistance established when it comes to Apple. All right. Now, there are two ways I can do this. I can draw my support and resistance lines, or I can use my all-time favorite, tried and true, tested moving average. And that moving average for me is the 20-day moving average. All right, now the 20-day moving average gives me an indication of how this thing has been reacting and how it could potentially react in the future. Now, as we see, all stocks, they never move too far away from the 20-day moving average. And so as we can see, if we do move too far away, we snap back like a rubber band. So we may snap back to that 20-day moving average. We may fall below that 20-day moving average. But for the most part, we never move too far away from the 20-day moving average. We popped up here back in January. Came back to the 20-day moving average, fell through that 20-day moving average, and began establishing some new lows, right? We start consolidating here. We crossed over the 20-day moving average, had a nice run up. We fell below the 20-day moving average, began building some strong momentum to the downside, right? Then we began consolidating, and we crossed over that 20-day moving average. Strong momentum to the upside. Now we consolidating along that 20-day moving average. And so what I'm looking for with Apple is, will this 20-day moving average continue to be a level of support, or will it break through the support and come back down as history has shown us? So here we fell through the 20-day moving average support and continued our downtrend. Here we fell through the support of the 20-day moving average, and we consistently established some downward movement. And so as we continue to consolidate along this 20-day moving average, I'm looking for a candle, one red candle below this 20-day moving average, because if there is one candle below this 20-day moving average, that may signal the opportunity for us to place a put option. All right, and so if I can get one red candle below this 20-day moving average, I'm possibly thinking of a 145. Let me see what we have here. Now the market isn't open, so the prices may fluctuate. But I'm possibly could look at a October 1st, 145 put option. Currently the price is at 217. Now, as the price of the stock goes up today, so if it's in the green today, we can see this put option possibly being a little bit cheaper. All right, we could see this being a little bit cheaper, but what we want to do is we want to wait until we have a red candle below this 20-day moving average to make and then we're going to make a decision where we want to jump in or not. Again, if it do fall below that 20-day moving average, and if you jump in, immediately set or a stop limit. All right, so again, you want to make sure that if it falls below here for one day and it moves to the upside, you want to minimize your losses, and the way we do that is by setting a stop limit. So if it does go back up to a certain price, or you can set your stop limit on a basis on a percentage. So you take a look at what you're buying. So if the put option is $2, you say, hey, 10% of $2 is 20 cents. So if the put option price drops to 180, you automatically sell and you're out of the deal. You minimize your losses and you begin to regroup, lick those wounds, and jump back in for another fight. Okay. All right. So that's what we're looking for when it comes to Apple. But as of right now, I wouldn't be looking for too much movement to the upside. We're just waiting to see if it falls through this support here at the 20-day moving average. Okay. All right. Now, also, let's take a look at the MACD. Let's see how the momentum is going. Very rarely do I use the RSI. The RSI is good, relative strength indicator. But when you have been investing for a while, you begin to study these candles and you begin to study habits and trends in this 20-day moving average. Oftentimes, that's all you need. All right. And, a professional trader had told me a long time ago, when it comes to investing, you only need 2 indicators, no more than 3. All right. I'm sorry, a minimum of 2, but no more than 3. All right. And so when we take a look at the MACD, we can see the MACD is kind of flat, but overall it's still trending downward. So we do have momentum exiting the stock. So hopefully that momentum will continue exiting the stock. The momentum will still give us a position where we could possibly place a put option and benefit from it. All right. Now, that's all I have for that. Now, let's take a look at Microsoft. All right. Microsoft has been booming. Man, Microsoft has been doing an awesome job. It crossed over the 20-day moving average on June 3rd, and it has been moving up sharply. I mean, this is like a 2-month run, and where it's just been, man, if you would have had, placed a call option here, you could have just rolled this buddy up, and you could have made a tremendous amount of money over the past couple of months. All right. So again, Microsoft has been running up, but when we pay attention to Microsoft do have these nice run-ups, 100 to 120, right? Then we fall back. We go up, and then we settle. We pretty much settle here around the 215 mark around December of last year, all right? Then we crossed over that 20-day moving average. We came back down, did some consolidating, and we had a nice run-up, right? Came back through the 20-day moving average. And the last time we crossed over the 20-day moving average, it's been a tremendous upward momentum, upward movement, upward push for a 2-month stretch. And so based on our history tells us that after we have these nice runs, it should be time for a pullback. All right, it should be time for a pullback. The candles here are giving us an indication that, the bears are trying to move in. The bears are trying to push back down and take some profits or trigger some sales. All right. So remember, 60 to 75% of all trading is done by computers. All right. 60-75% of all trading is done by computers. And so now that we know that, We know that these computers are taking a look at this and they're just waiting for certain triggers to happen to create a sell-off. All right, now we do have the doji candle, right? So this is a nice doji candle after a long, nice upward trend, and the doji candle could signal a reversal in pattern. But what we need is we need the following candle to be trading below the doji candle. And if we don't have that today, we could still have more upward momentum. We did have three bearish days, and then we had a doji candle, which pretty much is a sign that the market or this position was at a standstill. The bulls came in, they drove the price up a little bit. The bears came in, drove the price down a little bit, and then the bulls came in trying to recoup and trying to regain control of the stock. And so that leaves us with this doji candle. Not much happened throughout the day. And again, remember, these doji candles, or what we call spinning tops, could signal a reversal in pattern. All right, so nobody truly won that day. And so again, pre-market, we're up $1.02. We could have, we could go up $4 or $5 this week. But again, we're gonna have to follow and wait to see what how the day ends, because if we have a red candle following this doji candle, this could be a signal that we could reverse in pattern and we can just bounce back to the 20-day moving average. Remember, family, stocks don't move too far from the 20-day moving average. They always come back. Right now, Microsoft been on a huge run, but we came back down to the 20. Right, we had a nice another run up, and then we began to settle along the 20-day moving average before we had a couple of days where we had a nice spike up. And so we could come back down eventually to 293. All right, 293, that wouldn't be too far-fetched, but there could be an opportunity out there for a, let me see here. So when we take a look at Microsoft, we take a look at the $295 put that's running about $3.95. A price will fluctuate today throughout the open. If the price goes up, the price of the put will drop. All right, make it more attractive. And so there is an opportunity there for a $295 put expiring October 1st. But again, if the setup isn't there, we don't jump in. All right, if the setup isn't there, we do not jump in. Okay, with the doji candle, again, that following candle is trading red. This may be an opportunity for us to jump in and ride this thing back down, $6 or $7 to one to 293. All right, 293, 292. All right, so that is a possibility. Again, stocks don't go straight up forever. They do come back on occasions, and we may have an opportunity to catch this thing falling a little bit and make a little bit of profit. Okay, now that's all I have for today. Microsoft, Apple, make sure you take a look at those, and if this video added any value to you, hey, please hit the like, subscribe, and keep coming back for more of this wealth building information. Peace.